Hello, Southwest Florida homeowners and homebuyers. Welcome to the 239 Real Estate RoundTable podcast, your go-to source for navigating the vibrant real estate landscape of our beautiful region. I'm your host, Kevin Tremmel, a local real estate agent, leader, and investor here in Southwest Florida. On this podcast, we bring you insights from best in the business, top-notch real estate professionals, seasoned agents, and experts in everything from homeowners insurance to mortgages, maintenance, and repairs. Whether you're a first-time homebuyer or a seasoned homeowner, we've got you covered with tips, strategies, and valuable insights to make your journey in Southwest Florida's real estate market a breeze. Get ready to unlock the doors to successful home ownership. This is the 239 Real Estate RoundTable podcast, where we demystify the process, share insider knowledge, and ensure you're well equipped to make informed decisions. Let's dive in.
Hello, everybody. Welcome to another episode of the 239 Real Estate RoundTable podcast. Today, we are thrilled to introduce Paula Bonnafant to the episode. Paula is a mortgage broker with Edge Home Finance. She has been in the mortgage business since 2011, and I'm really looking forward to our conversation. Thanks for your time, Paula.
Thank you for having me.
Of course. Well, why don't we get started with the basics, right? Before we dive into some nuggets. But tell us a little bit about yourself. How did you get into, mortgages? How long have you been doing it? Where are you from originally? Where do you live now? Why don't you share a little bit about yourself?
Yeah, so I'm actually from a little tiny town in Connecticut, Hampton, Connecticut, where I grew up, a little farm town, so used to animals and things. I went on to live in New York City for quite a while and eventually found my way into Florida. I needed to find something to do for a career. I was making a career change, and my mother was a real estate agent for years. And so I did get my real estate license, but I really didn't want to do the same thing my mother had done. And so somebody suggested that I went into mortgage. So that's how I got started in 2011.
Nice. And ever since then, obviously, you've seen the crazy times, and now we're kind of probably seeing a little bit of the slower times. But tell us a little bit about where you're employed right now, Edge Home Finance. What makes them great? What makes them special? Why did you pick them?
Sure. So Edge is based out of Minnesota, and I have a branch here in Fort Myers, Florida. I'm also licensed in 7 other states, so around a bunch. And then, so Edge, to me, they're just it's like a family company. They have really great values. They really are open with their employees, and they just have a lot to offer for different lenders. They have almost 150 lenders on board, I think. And, they'll fly us out to Michigan to go meet with the top lender and get additional training there. So we're always learning. Right now, they're doing a coaching program. So a lot of us have years of experience, but they're always consistently helping us learn more and just gain more knowledge so we can help clients better. So that's really what I loved about the company, is how transparent they are.
Awesome. And while we're kind of on the topic of mortgage broker, and why don't you explain to us a little bit of the difference between a mortgage broker and maybe a traditional bank, and what would be the benefits of going with a broker versus, a typical bank scenario?
Sure. So we look at it, usually you've got a retail lender, a bank, or a broker. I've worked for all 3. Of course, I love working for a broker better. The reason I like broker, and I would, if I was doing my own loan, I would go to a broker. And so the reason I think that brokers stand out is that, one, in my case, like we have almost 150 lenders. If somebody comes to me with a loan scenario, I put it in, with one lender, and halfway through the process, something just isn't working right, I can just take that loan and go to another lender. If you go to a bank, you can't really do that. Same with a retail lender. You may have a little bit of a chance to do that with a retail lender, but not like a broker. We have so many loan products. I have so many loan programs that if somebody comes to me, like I was just talking to an agent the other day, and she tells me, well, I have a lender I work with, but there's always a chance that, you can't do one program or another, so I'll always need somebody. I said, I think I can do just about any program. And I really can. There's so many options. So that's good. And then the other thing is that we get wholesale rates. So a lot of times our rates will be a half a point better than if you go to a retail lender. Now, banks usually are really competitive, but the only downside on a bank is their turn times are longer. So where I might be able to close in 20 days, a bank is looking at 30 to 45 days.
Okay. So better rates usually with a broker, and then more flexibility when it comes to loan programs, because the banks, obviously, they have their they have their guidelines or their overlays or whatever, and then that's it, right? Like if you don't go, or if you don't fit in that box, they're just going to turn you down, like versus bank A or lender A. If they're not the right fit, you can go to B and C. So it just kind of opens up some doors, it sounds like, right?
Yeah. And then the other thing you mentioned on the bank, actually, a lot of times their ratios they're more limited. So sometimes if you're doing a conventional loan, they can only go to a 45% DTI where, we might be able to go to a 50. Yeah. So we do see they're more restrictive on their guidelines than we are.
Yeah, and I've experienced that firsthand. I mean, a lot of times you'll see that in the new construction world as well, where like the big builders, they'll do like a joint venture with, Loan Depot or Rocket or whatever it may be. And, if a customer comes and they don't fit the box of that joint venture, then they have to get sourced to someone like you, where it's a broker, and it just opens up some doors. And that actually happened to me once when I bought my current house. Like the builder's lender couldn't do it because my income, being an agent, it, always fluctuates, and I hadn't been in the business long enough. And I mean, you know how that goes, right?
I definitely do. Yeah.
Yeah. So they tried it first with their lender. And then once we exhausted all options there, I actually went through a mortgage broker, and they're like, yeah, no problem. Like, I don't even really know what they're talking about. Like, we'll get it done. So yeah. I've seen that firsthand. So that's cool. So, you've been doing this for going on 15 years. What do you find like most rewarding about your role and what you do every day?
So the thing that I love most, actually, my mother was a real estate agent, and she taught me how to invest. She was an investor. So my absolute favorite thing to do, I'm working with a lot of first-time home buyers. I absolutely love being able to teach a first-time home buyer how to buy their first home as a duplex or a single family, and how to turn that into a long-term goal of being a real estate investor and just acquiring properties as they go along. To me, it's just the part of the job I love the most. I really do.
That's cool. Yeah. And that's a good feeling, right? When you kind of set some people up for success, right? And they don't always know it yet when they like buy their first home, like how much it's going to change. But I think especially a lot of clients that I had like pre-COVID, like, what they bought their homes for and what they're worth now and how old they are. And it's just really cool that they trusted me back then. And, they trusted me, and now they're like in a really, really good spot. So that's super cool. But, speaking of buyers and first-time home buyers, but what do you think are some of the biggest factors that buyers should consider when comparing like their mortgage options, right? I mean, obviously there's many, many different options, and consumers get bombarded with options wherever they go, whether it's on Credit Karma or just on the internet and ads and this and that. What do you think people should look for when they pick a lender or just a general mortgage option?
So if I was in that position where I was starting to look for a home and it was my first home, the first thing I think I would do is take one of the first-time home buyer courses. And the reason I say that is because so many people are so rate sensitive, especially in this environment. You're hearing it on the news everywhere, get the best rate, and the best rate's not always the best option. Mm-hmm. The best thing you could do is take one of those courses, learn how to read a loan estimate so you understand it, and then go and get some quotes from 3 or 4 different lenders. And then when you have those quotes from the different lenders, ask that lender, can you explain this to me? Can you go line by line and tell me what fees are what on these? And then do that for each one, and then see how you like their answers, see how you like how much attention they're paying to detail and how available they are. There's a lot of lenders out there, that a lot of loan officers that won't go into detail, and they'll just by not giving you information, you don't know what to ask. And so you just take what you get. And I just say, learn as much as you can, work with somebody who can teach you as you go along, and work with somebody who's going to be available and has time to do that.
No, I think that is really, really, really great advice because, one specific thing that you said, the best rate isn't always the best option. And like you said, I feel like consumers, especially people that never bought a home before, or maybe on their second home, right? All they look for is the rate. And, I ran into this a lot when I was in new construction, more often than not, like our rates weren't the lowest. Like you could easily go to your local credit union and get a way better rate, right? But then you look at like a loan estimate or like the fine print of that credit union, and they're forcing you to buy down points, right, to get that rate. And versus the builder, yes, that's the rate. It's a little bit higher, but like we're paying all your closing costs, for example, right? So it just doesn't even make sense to spend thousands of dollars to get that rate when you could have a little bit of a higher rate, and your monthly payments maybe like $40 to $60 a month higher, but like you're saving $10,000. I mean, how long is it going to take you to break even on that, right? So it's great to not just look for the rate, but like everything else that obviously comes with it. And then I'd like your take, and obviously full disclaimer, everybody's situation is different. I know everybody's case is different, but what I get asked a lot by friends and family is the old conventional versus if you could, like I said, I know everybody's case is different, but if you could kind of share with us very top level, like at what point do you think a conventional loan would make more sense for someone versus an FHA loan? I'd like to hear your take on that, and if it's consistent with what I usually tell people. So
sure. So for conventional, I would say, hands down, if you're putting 20% down, you have a good credit score, that's conventional all day long. If your score is maybe a little bit challenged, under 700, and you're only putting 5% down, that could be FHA. So FHA dropped the premium, the mortgage insurance premium, a couple of years ago, and now it's equivalent to conventional. Before, conventional was a lot cheaper on the mortgage insurance, but now FHA can be in some circumstances. So if somebody's got a lower credit score and they just, of course, they're only putting 3.5% down or so, then that's FHA all day long.
Yeah.
But like I said, conventional, of course, if you're an investor, you're going conventional, unless you're a first time buying a duplex or something like that. But it's usually the mortgage insurance that makes that decision. Yeah. And the rate and the credit score. If somebody's in their high sevens, most of the time they're going to go conventional.
Yeah. Yeah. I always used to say, generally, like if you're under a 680 credit score, like conventional it just doesn't make any sense because
it's too expensive.
Yeah, the mortgage insurance, and if you're putting like 5% down and under 680, so that was always kind of like my cutoff, like the 680. And even then, I know it's hard. Even that 685 is going to be pretty hard for conventional, but I'm glad we're somewhat on the same page.
Yeah.
So as far as like mortgage process and, application process and how does a mortgage work from like start to finish, I feel like there's a lot of misinformation or misconception or unknown about that as well. I see that a lot with my first time home buyers when they get their initial loan estimate and then they get like their first closing disclosure and their second closing disclosure.
Oh, no.
But what are kind of like some key steps in the mortgage application process? And I guess how can buyers like kind of prepare for the steps?
Sure. So most of the time, everybody works a little bit different. For me, I tend to send out a online link and have my clients go ahead, fill out an application online. And then I talk to them once they've filled it out, kind of go over all the information on it, see if we need to make any changes. So that's one thing that a lot of home buyers don't realize is when they first fill out that application, they don't realize that it can be changed a little bit as we move along. So if they don't get the questions right or they didn't understand, we can go over that information and update it. Now, that would be different on the broker side than the lender, because the lender usually puts it right in with their underwriting team. But once I finish the application, I then shop for the lender it's going to go with. So there's a little bit of time there. before, unless they have a contract. If they have a contract, then we're going right in. But once the application's done, then usually they get sent a link to upload their documents. So then we're just looking for, we try to narrow it down. We don't want to ask for every document. Most people say you need 2 years tax returns, 2 years bank statements, and so forth. But I try to look at each scenario individually. And if I don't need tax returns, if somebody's a full-time salaried employment, a lot of times I don't need tax returns from them. So maybe one pay stub or something, but I really try to limit the documentation that they have to provide. And that just helps, because if you give too much documents over to the underwriter, it just gives you more documents needed in the process.
Yeah.
So anything you put forward, there's a rule that underwriting can't unsee what they've seen.
Yeah, even if it's not needed, the document, but you submit it, they can't unsee what. So yeah, I know what you mean.
Yeah. So, somebody may send in a bank statement from 6 months ago, and all of a sudden I need 6 months of bank statements because they did that, And so really try to limit how much is provided then. But so then after I've reviewed all of that, a lot of times I like to do what's called a TBD approval. So I try to do this on for all my clients. And it's just basically, I'll give a pre-approval, I'll review the file, check the income, everything looks good. Then I put it in with an underwriter, because I want the underwriter to actually review all the information and also give their qualifications. So then I know when that buyer is out looking for a home, it's not going to be, 2 weeks into the process and all of a sudden they don't qualify. I already have an underwriter's approval on it. So I try to get that done ahead of time. But yeah, then we go into contract, and then typically you order your home inspections. And once the home inspection comes back, that's when I like to get the appraisal done, because I really don't want my clients putting any money out of their pockets if for some reason the deal will be stopped because of something on the home inspection that comes back. So at that point, then we do appraisal and clear any documents that are needed and things like that. But the whole process, usually as long as the client participates, I like to say that, because, you have some clients that will give you all the documents right away, but then you have some that will kind of stagger the documents in for 3 or 4 weeks. If they're staggering the documents in, it could take 30 days, but most of my clients get me everything and we're ready to close within a couple of weeks. So
yeah, for sure. And yeah, that's good. Just top level overview of how everything works. It's such like a complex process. I feel like a lot of people just get confused and intimidated. One of the big things I also see is what the actual application, like most people think when they get pre-approved, they already applied for the mortgage, and I'm like, well, the lender can't apply officially until we have a contract and an address and stuff like that, right? So that's a big thing, like they're always like, yeah, I mean, I already got approved. I'm like, well, right?
Not really.
Yeah, exactly. So, those are always some things. And then, of course, the whole closing disclosure, oftentimes like 1, 2, or 3 closing disclosures. And you're like, well, why do I have to sign the first one if it's like, not going to be the actual one? I'm like, oh, it's just like compliance. So, there's so many like things, and it's gotten really complex. I guess for the better, because obviously we saw what happened in 08, 09. But yeah. And then, I'm sure being in our industry, when you get somebody, not everybody qualifies right away, right? I mean, might be of various different reasons. A common one is less than perfect credit score, obviously. So let's say somebody does a pre-approval or a pre-qualification and, their credit's just not where it needs to be. How do you kind of work with those clients to improve their mortgage options? Do you take them through credit counseling, or does like Edge Home Finance maybe even offer a separate department that does credit counseling, or would you do that, or do you outsource that, or like how do you kind of help them to get where they need to be?
Yeah, so it really depends on the level of what's needed. And so things have changed so much in the past couple of years with COVID. After COVID, I found like a lot of lenders were actually opening up programs more. So they're more accepting of lower credit scores now than they ever have been. I can close, down to 500 on an FHA loan. So honestly, if you have a score below that, then you need some work. And hopefully you don't have a score below that. But usually under that, that's when you start seeing, okay, there's default on student loans, there's car repossessions, there's default on mortgage, foreclosures, things like that. But I rarely see somebody below 500. Like you said, I've been doing this like 14 years. I probably have seen maybe, 10 people with a score under 500 in that amount of time. The one thing is, if you do have a score under 580, then you have to bring 10% to closing.
I was going to ask. I always thought,
down.
So I always thought 580 was kind of but that's for 3.5% FHA. And then you're saying you could do 500 to 580 with 10% down. And I'm sure, is it like a manual underwrite, or is it still like how does?
So sometimes it's a manual underwrite, sometimes it's not. It depends how much reserves you have. So I have one client that I've consistently helped. She always comes to me with like a 520 score. And I've been able to help her because she always has money in the bank. And so I can run that and it won't be a manual underwrite. It'll be just standard. But if I got another client who didn't have the reserves in the bank, it probably would be a manual underwrite. So with a manual underwrite, then you've got more restrictions on your DTI and things like that. So it's a little bit more challenging. And so sometimes clients do come to me with the lower score and they want to improve it before they go forward because they don't have the 10% down. So in that case, I take a look on the credit. Now, I'm not a credit expert, so I can't definitely give them the same information that a credit expert could do. But if I feel like it's something that just maybe bringing down the balances on their credit cards to help improve the score quickly, I'll do that. And then we can always do a rescore and just run the credit to see, basically you put it into the credit bureau, credit agency, and they tell you, okay, if you pay down these 3 cards, your score will come up 10 points maybe. They just kind of give you some direction. And so then I can provide that to the client and say, if you want to try this, we can try to bring your score up this way, or I'll just give them tips. We do have a credit person that a lot of the people in my company use. Honestly, I really don't use it too often because it's usually just, like I said, balances that need to be brought down. On occasion, like I said, if they have a car repossession or they have like a lot of recent late payments, then I'll send them over to credit repair and say, look, I don't think I have the resources to help you with this. Please set up a plan with a credit repair agency. But that's usually... But I wanted to also answer your question about the disclosures, because I noticed I missed that question. And I think it's really, really important because a lot of people don't understand it. But when we get a contract in, usually we don't already have third-party fees. So the third-party fees are from the title companies and so forth. So we have to give kind of a generic estimate when we're disclosing a loan. And so that's when the first disclosures come out, and we have to actually tell the client, okay, the fees are going to change. There's a tolerance level, so we can't tell you, okay, your closing fees are going to be $20,000, and then 3 weeks later they're $40,000. You'll never see that happen. There's a little tolerance, but what happens is throughout the process, as fees get updated, we have to keep disclosing, and so you may get 5 disclosures in a loan process and not understand it, and then 3 days before closing, then we're really kind of buttoning up all those fees and getting them together. So I did want to throw that in.
Yeah, thank you. I appreciate that. That's a good explanation. But and with the credit and the improvements and credit repair, it's pretty, well, first of all, I learned something new. It's quite fascinating that you can close loans up to or like down to 500. Because like you said, under credit score under 500 is like pretty rare, right? Because it might show on Credit Karma that it's under 500, but once you pull the actual bureau, I've seen very few as well in my years. But so that's cool. And then I feel like also oftentimes people also, you'd be surprised oftentimes how quick of a fix it is, right? I feel like the biggest thing that keeps like first-time home buyers with less than ideal credit from trying or buying a home is they think, well, I can't buy a home like anyway, right? And I feel like that's one of the biggest hurdles for them. I think number one, like just because you can't buy a home right now doesn't mean you can't buy a home in 6 months, right? But you just got to start, right, with someone like you. And then I feel like oftentimes people also don't they like underestimate how quickly you can change a thing. I've seen credit scores pop by like 30, 40, 50 points just by paying a credit card down under 30% or under 10%. Or with a lot of people also, well, I don't have any credit. I always say like no credit is a lot better than bad credit, right? Oftentimes all you need is like a credit card and then like you're on the high sixes or sevens, like whatever it may be. But I feel like a lot of people like that deters them, right? They just think, well, like my credit karma is showing 550 and I'm sure I'll need like 30% down and get like a 10% rate like when I bought my car, right? I feel like I would want to encourage people to at least like, you don't know what you don't know, like at least, I mean, it doesn't really cost you anything to pick up the phone and call you and be like, hey, I want to see how close I am to qualifying for a mortgage, right? I mean, there's a little bit of time investment, but it's not like, it's not like you're going to say, okay, well, what's your credit card number? I'll charge $2,000 to like give you, right? Like, I mean, so, I think that's what definitely keeps a lot of people. And so staying on the buyer and the first time home buyer track, obviously, as we know, affordability has just been a huge issue the last 2 to 3 years. And part of that obviously is due to just the high home prices, but also the rates in combination with the high home prices. What are you hearing? Where do you see rates going in 2025? And full disclosure, nobody has a crystal ball. Otherwise, we probably wouldn't be sitting here. But your personal opinion, what do you think the rates are going to do here over the next 12 to 15 months?
I can tell you what I hope they'll do. Honestly, it's been so unclear, I would say, for even the past 3 years, what rates will do. I would say 2 years, actually, because we, as loan originators, we have advisors that we look to who tell us what to expect with rates. And I can honestly say that for the past 2 years, they have not been correct. They were telling us, a year ago that the rates would be down by the summer, and the rates were higher, and last October is when they actually peaked out. And they were very, very high. And then they started coming down. And then when the Fed went ahead and lowered the rates in September, everybody was waiting. Everybody, I'd call, oh, no, we're going to wait till the Fed lowers rates. We're going to wait. And as soon as the Fed lowered rates, our rates started going back up. And then we just lowered it again. And we're hitting new highs again. We're not as high as last year, but they're definitely headed up. I do still believe they're going to come down next year. I really do. I believe they're going to come down. I don't think it's going to be as fast as we wanted it to be, but we're making progress. I just talked to one client who, he had told me he just refinanced and he bought his rate down for $12,000 to get a 4.99. And in my head, I was just thinking, I don't think I would have advised that, because just sit tight. I think the rates are going to head in that direction, but we never know. We really don't.
Of course, it's like I said, nobody has a crystal ball, but I think what you're getting at with his case is like, you just spent $12,000 for something you might have been able to have for either for free in 15 months or maybe for $4,000, right?
Exactly. Yeah. So, but, overall, they have come down a bit, and the savings are significant now from comparing last October till now. So it definitely has made houses a little bit more affordable than they were a year ago. And I really hope the direction just keeps going that way. We need it to,
Yeah, for sure. It's definitely seems a little bit delayed, but obviously I feel like a big misconception obviously is like, the Fed doesn't set like the mortgage rates, right? Like just because the Fed lowers the rates doesn't mean that the mortgage rates are automatically going to come down. So I feel like that's where a lot of the disappointment probably stems from, where people are like, well, I'm sure you've gotten the calls like, well, how are mortgage rates going up when the Fed just lowered the rates, right? And it's like,
right.
Well, not really how it works. So what would you, like a client calls you right now, slam dunk deal, like 780 credit score, conventional, we're putting 10% down, we're buying our new primary residence, whatever. What advice would you like give that client to kind of secure the best rate possible? Or would you tell them to wait to buy? Would you tell them to buy now and refinance? Or would you tell them to buy now and buy down the rate? I already know the answer to the last one. It will probably be no, because you already, but I guess, if somebody approaches you is just looking for some guidance, like when it comes to rates and buying, what would you tell them?
I would tell them that if they find the home they love, to buy it, because it's not going to be there a year from now. If it is there a year from now, it may be more expensive because the home price may go up. I have the same question with people, we're talking about repairing credit. And if somebody is repairing, they're taking 6 months to repair their credit, the home price may have increased by then. And so they could have just gotten a loan now for a certain price, but if they wait 6 months, that home price is more expensive. Now their payment's more expensive anyway. So that's exactly what's going to happen. If you find the home you like, buy it. Don't wait for the rate. You can refinance after, as long as you qualify. I have to say that because I can't just say you can refinance later if you're not going to qualify. But, if you can qualify and you can, and if you can afford the payment now, if it's not a factor of you not really being able to afford it, if you can afford the payment now, you find a house you love, buy it. You can refinance after and drop that rate.
Yeah, that's good. And same, I would echo that. And one thing that you said I also liked is, people that have like less than perfect credit, we already kind of went through this, but people get so hung up on the rate and they're like, well, I don't want to buy a house until my credit is like 800 and I get prime rate, like the best rate I can find, right? And they spend like months and months and months or years and years and years. You see that a lot as well with like down payment assistance programs where people like are chasing that unicorn, right? And they're just like waiting years until they fit into that down payment assistance box, right? Like good credit, under a certain ratio, like blah, 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 blah. Yeah. But like by waiting months and years, like number one, they could have just saved up 3.5% over 12 months or whatever it may be. And by waiting all these months and years, the price of the home is, 3, 4, 5% higher in a normal market. So how much do you really save by waiting all this time? Like, yeah, you might get down payment assistance, but you're paying the same amount, if not more, for the price of the home. Same with the credit, right? Like you might save, $80 a month, but you're paying $10, $15, $20,000 more for the home. So like you're really not like saving anything, right? It's like,
no.
Yeah, I agree. Why not like buy the home now, eat the rate for whatever time it may be and fix your credit while you're already in the home. That way, at least you lock in the price and then work your credit up that way. And having a mortgage on your credit report will also help your credit as long as you make the payments on time, obviously.
Yeah.
But great advice. So great, Paula. I want to thank you for your time. I think it's been very insightful. I'm hoping at least one first-time home buyer will get something out of this. Then, you and I did our duty here today. So I want to thank you for your time. If someone wants to reach out to you directly, obviously we'll link all your contact information and like your social media in the descriptions below. But if someone wants to reach out, how can they get in touch with you, Paula?
So always, of course, can call or text me. My number is 239-689-1331. And then also info@Paula's Home Loans is my email, info@paulashomeloans.com. So any email, text, call, whatever is the best option for them.
Awesome. Well, thank you so much for your time. And it was a pleasure having you on.
Definitely. Thank you so much.
Got it.
And that wraps up another insightful episode of the 239 Real Estate RoundTable podcast. I hope you enjoyed our discussions and gained valuable knowledge to enhance your home ownership journey here in Southwest Florida. A big thank you to our incredible guests and of course to you, our listeners, for joining us. If you have any questions or topics you'd like us to cover, or if you'd like to connect, feel free to reach out. You can find us on Instagram at @KevinTremmel_real estate, on Facebook at Kevin Tremmel Real Estate, or visit our website, kevintremmel.com. Don't forget to subscribe so you never miss an episode. Your feedback is crucial and we're always eager to hear from you. Until next time, this is Kevin Tremmel, your host, signing off. See you on the next episode.